today is Avenue Supermart, or commonly as D-Mart as we know it. And let's pull up that stock, see what the stock is up to right now. The losses are building up further for that stock. It's 3% lower almost in today's trade. Let's take a look at what the quarter 3 numbers were like. They came very late on Saturday evening, but here's what the earnings snapshot looks like. Revenue largely in line with what we were expecting, but it's a big miss coming in across PAT, EBITDA as well as EBITDA margin. Let's take a look at what the numbers look like. Your revenue is coming at 15,565 crores, which is up 17.5% year on year, very in line with what brokerages and analysts in the street were expecting overall. Net profit is coming at 785 crores, which is up only 6.5% year on year. We were expecting this number to be anywhere around 873 crore rupees. So that's a big miss coming in on the PAT front. EBITDA also 1235 crores. We were expecting 1,315 crores. So that's also a slight bit of a miss coming in. EBITDA margin, we were expecting 8.4. They've come in at 7.9 versus 8.5 last year. So big miss on that front as well. Now 10 stores added in quarter 3. The same store sales growth for 2 years and above stores, you have 8.3%. That is looking good. That's something that is looking optimistic for this company. The management commentary, they say that they continue to see increased intensity in discounting when it comes to the FMCG category, and that is also impacting the turnover per square foot of the company. However, this impact has been seen lesser in quarter 3 versus quarter 2, so that is some recovery that the management is also eyeing over here. DMart Ready has grown by 21.5%, and there are certain segments now that certain stores in certain areas where home delivery is their only point of sale, and home delivery is also picking up much more than in-store revenue. Big change coming in when it comes to the top bosses over here. There's a management change coming in. MD and CEO, the current one, Ignatius Naval Norona, has stepped down after 2 decades, and he will be replaced by Anshul Asawa, who's currently the country head of Unilever in Thailand and general manager for the home care business in Greater Asia. So that is one another change coming. That's a big change coming in when it comes to the top bosses. Quickly taking you through what brokerages are making of this. ICICI Securities has maintained a reduced rating, target price 3,300. Nuvama has maintained a hold. They've cut their target price lower from 5,040 rupees earlier to 4,212. Motilal Oswal reiterated the buy rating but also reduced the target by 300 rupees to now 4,450. You also have a bunch of foreign brokerages that have been weighing in. Macquarie has cut their price target by 15%. Morgan Stanley and JP Morgan both slashed their price targets by 12% each, and Jefferies and Cities have slashed their targets by 4% each. So this is what it's looking like. It's been a weak-ish quarter. However, the management commentary is looking positive, but we'll just have to see how long this impact of quick commerce and discounting that the company has undertaken is going to last for, and how many quarters of pain will DMart still see going ahead.
Well, absolutely. So the change of guard as well as that lackluster third quarter is what we were keeping in mind when it comes to DMart, then missed earnings estimates as well. However, you do have the e-commerce arm, that is DMart Ready, that saw healthy growth coming in. What does this mean for the stock going forward? Let's revisit Nikunj's take on the same then.
The stock reacted to those quarterly numbers because nobody expected a uptick. It was not like a massive turn which happened in the stock or the business. It was like a 2% uptick. So contraction became, contraction stopped. It's like IT. Those companies were contracting, and now that they've stopped contracting, the stocks have gone up. Also, DMart or Avenue Supermart came into FNO, and that led to, it's not a very liquid stock. It comes into FNO, there is a bit of a surprise, everyone was short on the stock, and then the bears were caught with tail between their legs. The quarterly update does not warrant a re-rating. Similarly, these quarterly numbers which have come out, they do not warrant a re-rating. There is nothing in the number which would tell you that, okay, Avenue Supermart has got their mojo back. With Avenue Supermart, I think you have to either take a leap of faith or you will have to start thinking contra. Leap of faith is that eventually this business is relevant to India. Quick commerce is not going to be lasting this kind of an burn, and whatever impact quick commerce is happening, it's not going to it will not go beyond some major metro cities, and that's where DMart and the big box retailers have an advantage. That is a leap of faith. Then there is a change of CEO. And markets have always derived comfort from this whole combination of Radhakishan Damani at the top and Neville really running the business. Neville's exit is coming at a time where generally business is going through a slowdown. So his replacement, will he be competitive enough? Because markets have drawn a lot of comfort from Neville. That's the second question. Third is that what would be the time at which value retail in general starts making a comeback, and when would the quick commerce shine start fading away. So those are three factors which I think at play. These numbers don't inspire too much of confidence that stock should go higher or needs upgrade. However, if you're buying DMart, you're buying that, okay, there is a great guy who runs it. This is a business which would be relevant and everyone is positioning against the stock. So based on these numbers, to make a case that it will go back to 4100, 4400, I think would be passé.
Okay, so that's Nikunj's take on where Avenue Supermart is expected to head. On that note, let's welcome on board our guests for the day. We have Gaurang Shah, Senior Vice President at Geojit Financial Services on the research front, who's joining us, as well as Kunal, who's our in-house technical expert, joining us on the show. Good morning to both of you gentlemen. Before we start addressing all the viewer queries, Kunal, give us a sense of what DMart is looking like on the charts, because last 6 months the stock has been heavily under pressure. See, the fundamentals are not looking very promising right now. Are you seeing something on the technicals? Is the stock looking attractive on the technicals? Fundamentally, it seems to be a couple of more weak quarters coming back, but what are the charts telling you?
Yeah, I think the stock seems to be now coming back into a zone where price-wise it may start to look a bit more attractive. So yes, I understand that the stock is in the thick of news flow, and there was a lot of things which have been happening into the stock price trend over the last 1 to 2 weeks, specifically when there was this 10% kind of an uptick on intraday basis. But then that did not see any major follow through, and you see the stock closing in the gap which was created on that day. But then relatively the stock is still holding on to the previous supports. What I like about the charts for DMart, specifically on the short term basis, is that the last 3 bottoms the stock has been making, even though in price terms the bottoms have been on the lower side on a relative basis, but the RSI has been the pattern for RSI is on a higher low trajectory. That generally is a first set of an indication that this could be maybe a final leg of a downtrend for the stock price. My sense is that at current levels as well as on dips, I think it could be a good buying opportunity from long term play.
Alright, then that's a take coming in from Kunal as well. Gaurang, before we move on to our first query of the day, I just wanted to get your take as well when it comes to Avenue Supermart. Is there anything that you'd like to add then?
Well, thank you very much for having me on the show, and morning to all of you all. So, I mean, not too long ago, I think a couple of days back, we saw and read the business update from Avenue Supermart, and post that we saw there was a huge spike up in the stock, and then post the numbers that they delivered, there is a little bit of dilemma over there, a lot of concerns in terms of price targets, short to medium term recovery. But as a disclosure, we are maintaining a positive view on Avenue Supermart. The company is trying to penetrate into the areas where it has not been, for example, tier 2, tier 3 cities and possibly semi-urban rural India. The targets on the fundamental side that we have set aside is somewhere close to about 4,400. I think post this initial reaction, knee-jerk reaction on the number front, the stock should stabilize. If you have it, hold on to it. And if you were looking for an opportunity to get into the stock at lower levels, then I think start from current levels, don't put all your money at one time, and start accumulating from a long-term point of view.
Okay, so that's the view coming in from the fundamentals on Avenue Supermarts. But on that note, we'll step into a very short break, and when we return, we'll start taking all your viewer queries. So viewers, keep writing to us on the WhatsApp number. Be specific about the stock you hold, the time period you want to hold it for, the risk appetite you have, the buy price that you have got the stock for, or if you haven't got the stock and if you're asking for a view, please also mention the time period that you want the view for. Keep writing to us, and we'll see you and start addressing all your queries on the other side of this break.
If you like this video, then like, share and subscribe to ET Now.